Hi guys, do you really think SIP is the most preferred choice for today's retail investors in this volatile Indian market? As you all know, what all happening in the current world, the global politics, the war between many countries. Example, Russia and Ukraine, and also the India-Pakistan, the tensions between this our country, India and Pakistan, and also the tariff changes with the USA across all the countries. With all these happenings, do you really think the stock market, irrespective of whether it's an Indian market or a US market, do you really think doing SIP, consistent SIP is the most preferred choice for most Indian retail investors? And my answer is no. The answer is absolutely no, because the SIP would give a nice returns from past many, some 10-20 years back, but not now, because the current events, if you observe the current happenings of various events, the market is slightly disturbed. You can't predict what happens the next moment. Anything might go wrong. For example, in today, the Nifty has been dropped by 24, almost the current rate is 24,600 points, and the Sensex has fallen almost 500 points. Do you really think SIP, I will keep on doing SIP, and in the next 5 or 10 years, I'll be getting a nice return with the Nifty 50 consider? I don't think so. Mutual fund managers are not, you can't depend completely on mutual fund managers. How do you know? Do you have that transparency? Are they maintaining the 100% transparency of the funds which you invest on every month? I don't think so. Nobody has it. So this is quite something which every investors need to think of that. There has been a notable spike in the SIP discontinuation in the early 2025. You know why? It's all because of the war, the conflict between various countries in the Middle East, or various other even in the Asian continents. So almost in the April alone, there is almost 1.62 crore SIPs were marked as discontinued. Do you know why this 1.6 crore SIPs has been stopped? Do you know the reason behind this? Because these are the people who are wise, sharp, who analyze the market and then take a decision. Just blindly, investing on a SIP, thinking one day long term I'll be gaining a fruit of it. No, I don't think that's the best strategy, the wise strategy. This is 2025. You need to be sharp. Even though if you are investing for a long term, you need to have knowledge of how the stock market works, and also the current events happening around the world. Only then you will be able to make wise decisions and beat the inflation and make some money and protect your capital, because protecting your capital is the most important thing. You may not make a profit, it's fine, but losing your capital will be the worst decision, worst mistake in your life. That too, especially in the stock market. If you do some business and then you lose and you shut down the business, that's a different thing, because you're going to gain some experience. But in terms of the stock market, investing in a stock market and losing your either a trading or any sort of investment on the stocks without proper fundamental analysis of a company or the current situations, that will hurt your capital, and also emotionally you might get disturbed. So my advice is that you better invest wisely. Learn about the various current events happening around the country. So I was just going through some of the details, some of the analysis. The average monthly SIP contribution has been grown sixfold over the past 9 years. Okay, that is from 2016 to 2024. Now it has been at the start of 2025, it has decreased a lot. Almost 1.6 crore SIP has been stopped. And then coming to the investors' behavior, the net decline in SIP accounts reflect increased investors' anxiety due to the market volatility. Foreign institutional investors are selling like anything, are shifting personal are shifting personal financial priorities. Their personal for the foreign investors, personal priority has become more important. The personal finances, because of this market volatility, they're not interested in the market, whether it's an Indian market or a USA market. They're just more focused on saving their capital, and waiting. They're sitting on the cash and waiting for the right moment to invest and make nice profit. I'm sure like most of the foreign investors are clear at this point of time that this is not the right time to invest on a large scale on any market because of the market volatility. So I think my advice is that it's better to stop SIP for some months at least in this year. And also there are some experts recommendations. Okay, SIP market experts urge investors to stay on the course with SIP, emphasizing their long-term benefits, the power of compounding, the importance of maintaining investment and discipline, especially during volatile phases. Of course, that is fine, but as long as if you have enough capital, it's good to do. Wait for some 10-20 years, even though whatever happens, irrespective of the ups and downs of the market or various events, if you have that financial backup, it's fine, you can wait for a very long time. Okay, if you're on a middle class, I don't think this is the right time to invest, and key take despite record volatility and spike in the SIP discontinuation, SIP inflow remains an all-time high, right? So even though there has been a SIP discontinuation of the SIP, still there is a lot of massive inflow into the market. You know why this trend massive, even though after all this market volatility, there is a lot of inflow into the market. These inflow, I see them as not a mature investment. Maybe these people are a new investors. Okay, so new investors are entering the market thinking, okay, I'm going to invest in this dip, and one day the market might go on the top and I'm going to sell it off. But how can you predict the market? You can't time the market, right? So it's a very risky time. Okay, so and regulatory changes and temporary spike in the discontinuations should not restrict the fundamental strength of SIPs. Investing for retail purposes, especially for the people who are investing, especially the retail investors, these regulatory changes which is happening affects a lot. The interest rate from the RBI or any tariff from the company like US, the Trump is shooting tariff on various country. The reciprocatory tariff is introducing. So all these things has to be considered and then decide whether to invest or not in the SIPs. So overall, what I would say is SIP remained a resilient and effective investment strategy. But what most important is that nobody tells you the losses that happens in the SIP. In the current market volatility of the Indian market, while while the interest rates have spiked due to regulatory changes, and investors are showing anxieties in this today's market. The various geopolitical events which is happening, this is also giving rise for both increasing the SIP as well as discontinuation of the SIPs. Because ultimately when there is a sellers, obviously there will be some buyers, right? That's the market. Okay, so invest wisely in this today's market. That's all I say. So when it comes to SIP, it's time to invest in, it's time to learn about the current events happening across the globe, because any events happens in the USA will also affect the Indian market. That's the one point. The second most important thing is, let's say 10 or 20 years back, there was a time, even though if you don't have any knowledge about the stock market, you can just keep on investing on a SIP, on a systematic investment plan, and then you make money after a period of a decade or two. But now the scenario has changed. Even though you are making long-term investment, the SIP, you need to have a knowledge about the stock market, the current events happening around the world. So these are the two essential aspects which I wanted to convey in this world, because ultimately whatever happens, whether the war happens or any regulatory changes, there will be two things in the common: discontinuation of the SIPs, and also there will be a massive inflow of the SIPs into the market. So it is for you to decide whether you will be the wise investors or a thoughtful investors, or some random just like a without any understanding, blindly investing and risking your capital. It's for you to decide. Be a wise investors and don't lose the capital. So thank you.